Welcome to today's finance series. It is always a great pleasure to connect with you during the week to discuss a particular topic on finance. Follow me as I go into this round of presentation where I am going to be talking about debt management policy. Thank you. In previous presentations, I've been talking about debts and how to create the appropriate strategies to manage debt within your organization. Today, I'm going to talk about debt management policy and all that we need to know. Debt management policy largely provides guidance on how various debts, whether long-term or short-term, would be managed in an organization, what these debts will be used for, when is it appropriate to use either of these forms of debt. It generally provides guidelines, basically, on how you would manage this debt within an organization. Note that this policy is a guide. Now, what are the contents that should be in a debt management policy? The very first is the actual definition of what debt is to your company. So your debts, of course, would include long-term or short-term forms of debt. However, things like unsecured credit terms, especially with respect to trade payables within 90 days or more, should be excluded from your debt, because these are items that affect your working capital or they affect operations within the organization. The next is the structure of the debt and the type of facility that you are looking to consider. Is it a bank loan? Is it a term loan? Is it a loan from a DFI? What type of loan should be stated in your policy? The purpose in which you are getting this debt for, whether it is to be used for working capital management or it is to be used to finance capital expenditure within the organization. The amount of debts that will be required, especially the ones that require approvals, needs to be stated in this policy. So for example, you can say that debts from maybe 100 billion and above would need approvals from the board. So what I'm saying in essence is any amount of debt that requires approval must be stated in the policy. Now, your policy should also include various types of debt management strategies that you intend to adopt. I encourage you to go through the last presentation where I talked about the various types of debt management strategies to get more insights on this. The next one is the governance and risk framework within the organization with respect to debt management. Moving on, the policy needs to state the responsibility of the Treasury or the Finance Department with respect to debt management, tracking these companies' performance or tracking the company's performance as it relates to the various covenants on debt. All this needs to be stated in the policy. So you need to know when to refinance, you need to know when you are thinking of restructuring, you need to monitor your performance as it relates to debt. And the very last one is on the approval process. All the approval process with respect to decision making on debts should be stated in the policy. And you should also remember that this policy must be reviewed periodically. Thank you so much for your time. Thank you for listening and do have a great one.